Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're taking a look at what to expect from Nike's Q4 fiscal 2019 financial results that are due out after the closing bell on Thursday. But before we do that, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe wherever you listen to your podcasts. So Nike stock fell about 1.5% on Monday to close regular trading at $84.50 per share, which is about just 6% below its 52-week intraday highs of $90 per share. So Nike stock is not too far off its all-time highs, and it's up roughly 13% in 2019, heading into its Q4 results that are due out later this week. But this does come in below the apparel market's average climb of 20% so far this year, and a little bit below the S&P 500, which, as of yesterday's close, was up around 16.5%. So Nike's up 13%. But it's down a little bit less than its market's average and the overall market average. This is also far below Lululemon's 50% growth so far in 2019 and way under Adidas, which is trading under the ticker ADDYY, and that's up 45% so far this year. So over the last 12 months, it just helps to give a broader picture of where the stock is heading into Q4 before we get into everything else, expectations and all that. The stock is up 17% over the last 12 months and 121% over the last 5 years, and that's compared to the market's 54% climb there. In terms of some more of its fundamentals, NKE, which is Nike's ticker, is trading at 28 times forward 12 months Zacks consensus estimates. So it's trading at 28 times forward earnings. It has traded as high as around 32.4 times over the last year, so below that, but it's well above its 5-year median of 25.2. And it marks a premium compared to the S&P 500, which is trading at around 17 times forward earnings, and its industry, which is trading around 23 times forward earnings. But that's not that crazy, especially since Nike has produced some outsized gains over that time period compared to its industry and the S&P 500. And then in terms of its forward price of sales ratio, it's sitting at 3.2 times forward sales, which is above its industry's 2 times average. But it's been as high as 3.4 with a median of about 2.7. So you could say its valuation picture is a little bit stretched at the moment, but nothing too crazy in terms of Nike, since investors are clearly willing to pay more for this big sportswear giant that doesn't seem to be going anywhere but up for the next several years at the least. And then also in early May, Nike announced a quarterly cash dividend of 22 cents per share for its outstanding shares of Class A and Class B stock payable on July 1st. That's to shareholders as of June 3rd. So if you're listening to this and thinking, I want to buy Nike to get that dividend, you already missed out. And at the moment, its dividend yield sits at around 1%. So nothing that stellar there, but it's a dividend payer, relatively solid valuation picture, and Nike stock just kind of continues to climb over the last several years. So now I want to get into what to expect from Nike's Q4 results that are coming out after the closing bell on Thursday, June 27th, which is crazy to think that already next week is the 4th of July. So Nike is coming off a better than projected third quarter. However, company executives said that they expected a low single-digit revenue gain in Q4, due what in their point was mostly to currency headwinds. So they projected that would reduce growth by around 6%. And then also we should note that there is some industry upheaval at the moment in terms of footwear with the U.S.-China trade war. So the apparel market in general is a little, you could say, nervous about this, but it might not end up affecting the consumer as quickly as some would expect, but we won't get into all of those various reasons just yet. So in late May, Nike, Foot Locker, Adidas, and a bunch of other companies, a total of 173 companies that are part of this larger apparel footwear market group in the U.S. wrote a letter to President Donald Trump urging him to reconsider tariffs on shoes made in China. Part of the quote says, the proposed additional tariff of 25% on footwear would be catastrophic for our consumers, our companies, and the American economy as a whole. And they go into a lot more reasons why. But as I said, it doesn't seem that at the current moment it will really affect consumers just yet, but we'll see how this all plays out. But I don't want to get into all of that at the moment. So on top of some of these broader concerns about currency headwinds and maybe some tariff concerns, Nike is entering its report as it faces maybe more competition than it has seen in recent years. This is coming from the likes of smaller brands like Lululemon. Adidas has now become, you could say, more of a Nike's peer on a global scale. You also have Puma growing. The Gap is rolling out its own athleisure brands. It now has its own men's line as well. But Nike is still really at the top of its game at this point. It's like other retailers. It's focusing on its direct consumer future, which is pretty much going to be digital. They're then rolling out their own stores. So they still have relationships with other big retailers, but in this Amazon age, Nike, like everybody else, is focused on their digital future. This includes Nike Plus memberships that offer discounts to members. They also have different apps in different digital platforms. Some is focused specifically on sneaker lovers. They have a sneakers app, and this is all kind of part of Nike's big market where they own this hip sneaker market. We've talked about this on this show before. This includes the Jordan brand, and this is what all these companies in this high-level sportswear are trying to do, is become kind of a mixture of fashion / sportswear / athleisure, where Nike shoes can be worn at any event. This is something that Nike's tried to cultivate over the last, you could say, even 20 years, but in the last 5 years, it's become even more apparent. Nike and Jordan brand had a big show at Paris Fashion Week. They held an event right outside the Eiffel Tower this past week. They also have different partnerships with creative fashion designers all over the world at all times. This is just building that brand of Nike is a part of this broader culture at all times. Something that's happening in Chicago right now. There's at the Museum of Contemporary Art, there's a big show from a guy who is now the head of menswear at Louis Vuitton, who used to work and still does work in collaboration with Nike. That's Virgil Abloh. So all of this stuff is part of how Nike and other companies like Adidas, you could say, is their closest peer in this, are penetrating this broader fashion world, which Nike sees as kind of a key to its future, as they have to remain this upper echelon brand that's then also attainable for everyone else. But I don't want to get into too much of this, but that is a part of Nike's plan. I'll get into more of that at the end about how they see them growing their brand in the future, sort of in perpetuity, with a plan that involves just controlling culture and cultivating the right people wearing the right things in the right places. And that's really how all of these brands like Nike, where you're really just paying for that Nike swoosh or whatever is on that particular Nike clothing, you're paying a big upcharge compared to any other brand that might not have that cachet, such as Nike. So more specifically in terms of where their digital growth is going to go, CFO Andy Champion has said that he expects Nike's digital business as a whole to make up about 30% of its total business by 2023, and that's compared to just around 15% last quarter. So a big jump there. And then, as I mentioned, they're trying to do their own big direct-to-consumer push in this Amazon age, but they're also still working with the likes of Dick's Sporting Goods and Foot Locker just on a more what they call a strategic basis. So now let's get into the exact outlook. So right now, our current Zacks consensus estimates are calling for the company's quarterly revenues to climb about 3.7% to 10.15 billion, which is down even slightly from last week's estimate. So analysts are expecting even a little less than they did just last week from Nike's Q4 results. For reference, last quarter, Nike's quarterly revenue climbed around 7%, and they also surpassed our Zacks consensus estimate, and that was also already down from 10% growth in the second quarter. So they had 10% growth in Q2. Our estimates are calling for around 3.7 top line growth this quarter. But as we should remember, Nike executives are saying that a lot of this downturn will be blamed on what they're calling a 6% currency headwind. So then at the bottom of the income statement, Nike's adjusted Q4 earnings are expected to slip actually 4.4% from the year ago quarter to 66 cents per share, which is also down slightly from last week's estimates. So both its top and bottom lines have been moved in the wrong direction just over the last week heading into its earnings report on Thursday. For reference, Nike's third quarter earnings came in flat from the prior year period, but they actually topped estimates, and the firm has beat estimates over the last 4 quarters by an average of around 10%. And Nike pretty much with its management team always beats earning estimates. So Wall Street kind of prices that in on the day of the report unless they have some massive beat. So investors will be looking more for their digital growth, their growth in China, how North America sales are going. So we don't have digital estimates yet. That is something that analysts will slowly start providing over, I would assume, the next year or so. So we do not have specific estimates on their digital business, as Nike doesn't really break even that down into hardcore numbers as they do with some of their other units at the moment on a quarterly basis. They just kind of provide a broader overview at this point. So we are going to look into North America and Greater China more specifically, because those are their 2 biggest markets, and China has been a market that's been a huge growth market for Nike, and it's a huge growth market for a lot of retailers as that middle class grows in China. But as we know, there's kind of a change in the Chinese economy. It's slowing a little bit at the moment, so it'll be interesting to see what Nike does there this quarter. So in terms of North America, Nike's North American revenues are projected to jump roughly 7% to around $4.14 billion. And this is based on our non-financial metric estimates on our Zacks.com website. This would roughly match last quarter's 7% expansion in the region that accounts for around 40% of Nike's total sales last quarter. So some solid maintenance of North American growth, and this is coming after Nike has returned to growth in North America over the last year after having a little bit of a downturn in the previous year. So then in terms of Greater China, as we talked about, it's become a huge fashion hub in some of their big cities, growing middle class. So China's been a huge focus for Nike for the last decade or so. Last quarter was the firm's 19th consecutive quarter of double-digit revenue growth in that world's second largest economy. So sales in Greater China surged 19% last quarter, which did fall a little bit below our estimate. And then that also fell short of Q2's 26% expansion. So last quarter was 19%. Q2 was 26%. And then this quarter, our estimates are calling for just 6% growth in Greater China. In the year ago period, that growth was at 35%. So this could be where some of the currency headwinds are coming in, or on their earnings call, they might dive into the business has just kind of slowed down in that Greater China area for now as the trade war goes on and it is impacting maybe the Chinese economy more than people expected. So that's something, if you are a Nike investor or a potential Nike investor, to definitely read through the earnings call or pay attention to any reports on that afterwards. I'll likely break down a little bit what we learned next week on this show at some point about any updates on Nike's Chinese business at the moment and then where it's going with digital, because as I mentioned, we don't have estimates for that, but they will break down on the earnings call where they see their Nike Direct business going forward. So that's really what you need to be paying attention to. So we see a little bit maybe of a slowdown from recent periods in Q4. But then looking ahead to the firm's first quarter 2020 earnings, those are projected to jump 19% on 7.3% revenue growth. And then if we look at, I'm going to pull this up real fast. If we look all the way ahead to fiscal 2020 for Nike, our estimates at the moment are calling for roughly 18% full year earnings growth on the back of about 8.3% revenue growth. So that's some steady top and bottom line growth in that next year as well. So as I mentioned, Q4 could just be a little bit of a slowdown as part of these currency headwinds that Nike is talking about. And then Nike executives last quarter on their conference call talked a lot about how North America is still a big driver. With Jordan, they're focusing on running as well. They're really trying to grow their women's brand also, specifically for their Jordan business. They see women as kind of being an untapped market for that Jordan underground secondary market for shoes, where Jordans and some of Nike's shoes are highly sought after. And as I mentioned, they're continuing their work with Foot Locker and Dick's as they kind of slowly get rid of some of their other wholesale, resale partnerships. They also are focusing heavily on mobile. They see that that is really kind of a way to maintain that relationship with their consumers at all times. And then as a lot of other companies, even Under Armour, all these companies, this is something they're always trying to do, but they're really trying to streamline their go-to-market process so they can be up on whatever trends are happening as soon as possible. And then this is just always something that's good to note with Nike. This is their real plan for everything they're trying to do, and that is to be front and center in 12 major cities around the world where they see this as fashion hubs that trickle down to the rest of the world. So whatever's happening in these 12 major cities that I'm going to mention here real fast at the end, if it works there, it's going to work everywhere else. And that's how they've been cultivating that Nike brand for the last several years, and how they plan on doing it going forward as they grow their direct-to-consumer business and push further into athleisure wear and continue this fashion integration push. And as we've mentioned so many times on this show before, they have a real big business in basketball and soccer, which are the two biggest global sports at the moment. So they also are not letting go of their core, we are a sports company. But these 12 cities, just for reference, are New York, London, Shanghai, Beijing, Los Angeles, Tokyo, Paris, Berlin, Mexico City, Barcelona, Seoul, and Milan. And that is where these key cities are expected to represent over like 80% of their growth through 2020. This is based on their own estimates. So this is where they see their business being built going forward. And it'll be fun to kind of watch to see how this plan evolves, if they continue to focus on these cities, if any of these cities change, if their business change. But as a whole, as I've mentioned, Q4, our estimates are expecting a little bit of a slowdown. Nike is saying that that's going to be based on currency headwinds, so we'll have to see what it actually comes down to on their conference call later in the week. But this is a company that is certainly worth paying attention to at all times, because Nike's not going anywhere, even though they have competition coming from maybe more angles than they ever had before. But make sure you tune into next week. This show will definitely break down what actually happened and then hit on some other topics as well. So that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.